everybody, happy Thursday to you. Welcome to the closing beat. All is good? I see y'all complaining about snow and stuff. I don't know what that means. Salt and snow. I don't know. Good luck. I wish you well. Welcome to the closing beat. We're financial advisors here at Jazz Wealth. And I have really two sweaters now. I got my Jazz Wealth sweater and I got this sweater. So if you see me wearing the same thing, yeah, I do it. I don't know what to tell you. I'm not buying another sweater. So it's Florida. We tend to play chess. You get what we mean when we say that? Other advisors play checkers. We're playing chess. We're trying to say we're a little bit smarter here. And I'm toot my own horn, so to speak. That's metaphorically perfect for the name of the company. It was another one where it was working with a client that to retire earlier than they wanted to meant that they would have more money. You don't think that's possible until you do it a bunch of times and you're like, wow, okay, let's think this through. We did it again. I love when I come up with that stuff. And I had a phone call with another client where I was like, I see where this is going. You're going to be able to retire sooner than you want. Obviously, it's a cool thing when somebody can do something like that. Our Wine and Wealth last week, we talked about if you're just about to retire, what do you need to do? What do I need from you? How are we going to get this done? Let's make sure we got a good plan. How are we going to adjust when things go wrong with tax laws and whatnot? Well, tonight we're going to talk about tax laws. There's a bunch of new tax laws actually coming your way. I'm going to go through, as I always do, not through a news article. We're going to go through the actual publication from the government. So the actual proposals that they have. And by the way, this is bipartisan agreement here. There looks like this is going to get done. And what you saw on TV was just the surface there. So tonight we'll cover that. Let's cover the markets here today because that's what we do. Well, okay. Well, it's not right again. There you go. So the S&P, you know something funny? This is a stupid stat, right? But I got to tell you, do you know that so far year to date, the daily average performance of the stock market, S&P, is 0.02% per day? Positive. I mean, it's positive, I guess, but that's what I mean when you look down below and it says like it's like a whole new year, right? We really haven't accomplished anything. 0.23% is what the entire growth so far this year has been. So it's a little below average. I don't mean, 0.09% per day is the historical average there, but so far we're a little bit low there. Now today, the Magnificent Seven, they call it the Magnificent Seven. Those stocks in the S&P responsible for about half of the day's gains. I think just a touch over that. All right. Before I move on to the rest of the stuff there, I do want to cover yesterday because I missed yesterday. Did you see the retail sales numbers? I did. I still looked. Or maybe not here, but I'm not here, right? Not on vacation or whatever. So the retail sales yesterday showed that during the holiday season, you guys spent more than you normally do. You bought everything in sight. That's basically the nice way to say it there. What that means, though, is you gave the Fed, right? If we go back over here, you gave the Fed the confidence to leave rates higher. That's now another data point that they get to use. And you say, well, no, look, they're interested in inflation. First of all, the bond market's fallen here. That means rates are going back higher and holding higher. That's fine. I actually don't mind that in this case, but I think that's a great mean reversion move there. But otherwise, you gave the Fed the right to say, oh, we're just going to leave rates higher. What happened today? One of the Fed presidents comes out and says, maybe third quarter now. Like, this is going great. People are happy. They got lots of money. They don't mind paying higher interest rates and all that's good there. Now, here's the catch. There's going to be another data point that hasn't come out yet that will also give them the right, the ability to keep that higher. And that's why you see the bond market moving today. Not because of retail sales yesterday, right? It's because, think about this. If you didn't know this already, inside of the retail sales numbers, there's something called core retail sales. Kind of like when we do inflation and then consumer price index and then the core inflation number. That's the difference between the two. Well, they do the same with retail sales. That core retail sales number was up almost 1%. That number is included in the GDP number, right? So that now we know that GDP is not going to fall apart, right? The support there is going to help it. So the Fed's going to get a nice number and go, well, okay, maybe fourth quarter now, right? And so that's why the bond market's moving, not so much on news from yesterday. If you're familiar with the efficient market theory, that's what helps you believe that, right? If you don't believe in the efficient market theory, then that's a tough one there. I don't know how you're going to argue that one. But anyway, so what we're looking at here is now you have the consumer spending portion of GDP is going to be up. Now we can calculate it, 2.7%. There's no question about it. It will be that number. So that's going to help support GDP. So you can't say that the economy is going to fall apart with the next number or looking backwards anyways. All right, let's move on. Sidetrack there. Hey, the NASDAQ. Here we go. So the NASDAQ, before today's afternoon rally, the NASDAQ was also flat year to date. Got a better rally there because of the Magnificent Seven there. I do want to point this out. Okay, you know the Magnificent Seven, right? The concept there is it is the 7 largest stocks in the S&P, right? Meaning the biggest market cap. So you take the value of the shares times how many shares they have. Oh, that's a really rich company, okay? One thing I want to point out, guess who, just take a guess. We'll let the stream catch up for a second. Cody won't let me forget. Guess who just moved into 9th place? So I know it's not in the Magnificent Seven, but just went whoop and came into 9th place there. Do you want to take a guess, Cody? He says no. He said, no, I wasn't even listening to you, man. Yeah, anyways, I point that out because I'm going to go, I'll come back to it in a second. Who just took over 9th place and working, it's going to take a lot more to get into the top 7, but really interesting to kind of look at that. I'll come back to that in just a second because I want to point out the Russell 2000. If you are invested individually in stocks in the Russell 2000 or somehow participating on a stock level, you've been on a wild ride. About 30% of the stocks in the Russell 2000 have already moved plus or minus 10% for the year. 12 days, 10% or more in 12 days. So this is where the action's at, not always in a good way. Of course, there's some that went down more than 10%, but really, really sort of moving quick there. If you take the Magnificent Seven, and please let me preface this by saying, I know that this is not the Magnificent Seven. This is hypothetically. If you take what would be the Magnificent Seven of the Russell 2000, you actually already, as of today, would have a gain of 80% year to date. There's no way you could have known what stocks they were. There's no way anybody would have suggested them. So this is just hypothetical. 80%. Now, to be fair, the Magnificent Seven of the Russell 2000 have never made a profit and combined lost over $800 million in the last 12 months there. So don't worry about the fact that you missed that, right? That was highly speculative. All but one of them are biotech stocks that don't make any money. They lose money hand over fist, right? So anyways, just thought I'd point that out. Let's go back real quick. So who just took over 7th place? I see some United Healthcare. How is that? AMD. That's actually a good guess. Yeah, that's a good guess, actually. But that's not the right answer. Eli Lilly. I didn't have a chance to put a whole beautiful thing together, but Eli Lilly has officially taken the 9th spot, working on getting in the Magnificent Seven. You wouldn't think it, but hey, weight loss drugs. Hey, all right. I don't want to do anything hard. I want to, do that and get the drugs there. So for the moment, they're crushing it there. They have what was it? On a forward basis, I believe they have the same PE as NVIDIA. Just so you know how wild that move has been for Eli Lilly. So really, really pretty cool. Everybody's looking over here. AI, yeah. Wait a minute. Drugs. What are we talking about? New Year themes there. The weight loss drug companies. All right, let's do some stocks in the news. Actually, Cody, do we have a leaderboard here?
We do. We have a really good leaderboard this week. It's actually been really, really cool. We got Peter, Andre, Ella, Tone, and Nikhil, top 5. But there's a lot of guesses above and below these that are all really close. So, yeah, should be an exciting finish. Jazzwealth.com. Get your guess in by tomorrow, and you can play next week.
Wow, you're not lying there. So we have more people playing. Is that what it is? Because you...
Yeah.
Oh, we do. Okay. Because I noticed the spread there a little bit tighter.
Yeah, tighter spread. It's good.
All right. Hey, look at that.
Can I derail the show real quick with the stat? You had a dumb stat earlier. This stat was kind of going viral on Twitter.
What?
99% of Americans live near a Mexican restaurant. Would you have guessed that high?
99% of Americans.
Per Axios, yeah. So it's a real study. There's only 15% of counties in the country that don't have Mexican restaurants. So it's 1% of the population.
Jesus.
Yeah. So I just wanted to derail.
Well, I look dumbfounded because I'm trying to think, where's mine? Like,
Yeah.
Kevin.
Tex-Mex counts, but
Dude, there's not one by me, dude. This is it. This is the key.
Yeah.
Can you cook? I'm sorry.
It's not how that works.
It's not a given, right? That he can cook.
That's true. Yeah.
Get some of them girls to teach you how to cook, man. All right. That's a great stat.
Yeah.
Did I share the stat that 50% of Roger Federer's name is
You did.
Okay.
You did.
That one sticks with me. I don't know why. Such a weird thing. Anyways, great guesses there. And I've obviously guessed the Dow as well as who took ninth spot. It's pretty cool. Let's look at some stocks in the news here. And I got to make them all. Humana. Apparently, this was exciting. I was talking to Eric, and he was like, man, if I had money, any other money, he's like, I'd be all in on this. I'm like, really? This would have been your pick out of all of them. He was so excited about it. But Humana, all right, so they didn't report earnings. They moved their earnings forward. So let's just get this over with. We're supposed to do like the first or second week in February. Let's just knock it out at the end of this month. It's not going to be great. The main headline that grabbed attention was it was supposed to be about $28 in total for full year earnings, and now they're down to like 26. I forget the number. Wasn't all that bad, but if it's like, what was it, 2 quarters ago, middle of last year, they're like, hey, we're not going to participate in the Medicare Advantage thing, right? You could back those numbers out and kind of see what's going on there. So I don't know that it was a horrible surprise. Maybe that's why it got bought up today. I don't follow it enough to know that, but that was one of the big movers. Plug Power. Okay, so, right, we got, your stock's not doing a whole lot here, right? We're losing value. And they have a couple choices. The choice that they chose to do was to basically dilute the stock even more and raise $1 billion. So that's a really tough stock to get excited about at the moment. I'm rooting for them, but that's what's going on there. Sheryl Sandberg leaving Meta, formerly Facebook there, and apparently they are spending more money than expected, but we'll see what happens there. I didn't follow too much on that because she's not leaving like right now. It's not drama. She's like, look, I'm rolling out. I'll leave in May, right? So it's not the typical, so-and-so has to step down immediately, and then 5 days later you find out they stole money from the company or something. There's no drama here, so stock doesn't really participate on that. Now this is earnings. So Taiwan Semiconductor, very important. By the way, the new tax laws are helping those from Taiwan that make money here in the United States. We're going to give them a tax break, whether you agree or not. That's what's happening there. Taiwan Semiconductors breaks to new highs there. Obviously, it's a big move. Pops and stops right at like 10% there. They beat on earnings, and guidance was, hey, profit margins, muy bueno, looking good. So that's what happened with Taiwan. I'm not sure you could have guessed the move, but you probably could have guessed the beat. And then Boeing, actually a bunch of things going on for Boeing. They got a bunch of new orders here today. They're not being delivered anytime soon, but these were for the trouble plane, the 737 MAX. There's an Indian air company that for some reason was marketing to me like months ago. And they just finally got a deal done for like 130, 150 airplanes there. Now, the real exciting thing to me, if you think about it going forward, is earnings. You see the action there. Humana makes an adjustment. Taiwan Semiconductors actually reports. You get big movements there. We have the last of the banks and moving into the insurance companies that will be reporting. You've got Ally, Comerica, Fifth Third Bank, Huntington Bank actually was reporting too. Regions Financial, State Street, and Travelers Insurance. In the oil space, you got Schlumberger, but it is a tricky one because there's no consistency there on earnings. So if you're thinking, I'm going to guess that it goes higher, it could, but statistically, it could just as easily go lower. Your best performer there for earnings going into tomorrow, if you're looking for a positive move, is Travelers Insurance. 5 out of the last 8 times it was higher on earnings, on the actual event of earnings. And the worst one is Comerica and Regions Financial. I would not have guessed Regions. Regions only up twice in the last 8 earnings reports. So if you're a contrarian, is this your thing? Is this your thing here? All right, I'll take your questions if you have any. Otherwise, I'm going to get ready for Wine and Wealth here tonight. We're going to dive into the actual specifics of the tax laws that are changing. I am very happy about the part that I like, right? The other parts you're kind of like, I don't know, guys. Just giving away more money. But for the part that they're giving away money to me, I'm like, oh, okay, I'm happy with that. Costco, will it ever split? I don't know. I don't know if they have what their stance is on that. Obviously, they've come a long way. How far can I? Do they have any history of a split? What's this here? No, dividends. I can't actually look back far enough on this to tell you. Okay. Look here. If you zoom out far enough, going back 2009 is right. Coulda, shoulda, woulda. Right. What a move. What a move, people. All right. So we'll see about Costco there. Cracking down on membership sharing, and they're going to be raising prices. Remember, they said it's not a matter of if, but when. So they will be raising prices. They cleared that one there. Didn't mention Discover. I mentioned it not yesterday, the day before. Yeah, the Discover Financial. I was more interested in KeyBank today, so I spent a little time looking at that one and more of their, reports. Can't look at everything. Market access, descending triangle. There's a number of different patterns that this technically counts for. Obviously, it is a multi-day, there you go. Multi-day pullback to the 200-day moving average with a rising 50-day moving average, maybe a little bit of a golden cross there happening soon. So you could say that. You could say it's a nice breakout pullback to support, depending on how you define a pullback. A breakout. And then from a Fibonacci standpoint, you also have a good support area. I don't care what you see when it comes to technical analysis. I care what everybody believes that they see. So I just mentioned a handful of strategies that have really in-depth discussions about having to have a lower high and a lower low on a daily basis to count as a pullback. There must be 3 or more of them, all of this stuff. I've taught everything, right? So we could spend hours on this. What I care about is not one magical strategy, but a sort of a confluence, I don't know what the word is, where all of the different strategies that segments of the participation believes in are coming together, right? So if you believe descending triangle, Fibonacci players just believe in that. If the price support people believe in multi-day pullback to a price support area that they believe they can believe in, the golden cross people there, the major and minor support people that are out there, all of that stuff coming together is a long way of me saying, yeah, I get it. Right? You know why I do that too, right? It's not to try to be all-knowing. It's because if you get it wrong, then you know your strategy isn't wrong. It's just the odds of getting some wrong every now and then. Because so many other strategies got it wrong on that one, maybe news causes it to just fall out of place or something. A great example up here. I don't know what happened before, but let's say it breaks out to highs and you bought the pullback and for a few days you think it's good. All of a sudden news comes out prior to earnings and you couldn't. That's a loss. Every strategy there would have lost. When does Raytheon report the engine issues may have been priced in the last earnings? They are not coming up, right? We're just getting going, right? Earnings season we're easing into it there. So I don't know exactly. I don't have that screen up, sadly. Do you ever buy into dividend-paying funds? No, we build them. We will replicate them, but I don't like to buy into other products that cost money. I just see it as like, hey, you're paying me to do the work. Right? If you join us or you work with us, I'm supposed to do the work. Why would I then go buy some other product and make somebody else do the work? And now I'm the middleman with the investment stuff. So I just don't believe in doing that. So we just usually replicate them. Yeah. Yep. Already starting to talk about March, Doc. Jeez, man. Live a little. Enjoy the day. Carpe diem. All right, I'm going to wrap it up. Get ready for Wine and Wealth tonight. Maybe, start on the wine a little early. It's one of those days. I'll have water first. Let's do that. You guys enjoy the rest of your day or evening, and thanks for watching. Thanks for supporting us and putting up with my nonsense. More of it to come.